I'm joined today by Anthony Chow, the co-founder of Agronomics. Anthony, you've just announced your Q3 results. Can you give us your key highlights?
Certainly. So Agronomics portfolio across the last quarter continues to perform pretty well, notwithstanding the really challenging financial conditions. I think what is most encouraging of all is that we have seen a number of our major investments be able to attract additional funding. Meatable raised 30 million euros in its Series B funding round. This is our cultivated pork company, and we co-led that funding round because we think that it has one of the most robust technology platforms in the field. And then Blue Nalu was the second company to raise a really significant amount of funding, $33.5 million, including a lead investment from Neom. That investment came paired with an MOU with Neom's food team, which sort of verifies our belief that these technologies are particularly interesting to investors in the Middle East, because aside from addressing the environmental issues associated with animal husbandry, we think that this has a really significant role to play in supply chain resilience and ultimately food security for the global population as we push towards 10 billion people.
So as you've mentioned, there's been considerable funds raised despite the market backdrop. Are you seeing any specific types of investors?
Yeah, so InvestNL was the key investor that came in alongside us into Meatable. This is a large government-funded investor in the Netherlands. And Neom is, of course, funded by PIF, which is Saudi's sovereign wealth fund. And the reality is that we are going to need that caliber of institutional investor to participate in the field because the amount of capital that's going to be required in order to really scale this technology and produce anything like a meaningful amount of protein in the context of global food supply chains is going to be absolutely vast. The Good Food Institute estimates that approximately $1.8 trillion is going to need to be invested into the capex of this industry to meet just 10% of the world's protein production requirements. So we've got a long way to go from the $6 billion that has been invested in the field to date. But I also want to note that when Agronomics made its first investment, only $50 million had gone into the field globally. So we were very, very early into this industry. And as a result, we've managed to secure very meaningful positions in some of the category leaders in the major protein categories: beef, pork, chicken, bluefin tuna, dairy, eggs, and a number of other smaller categories.
So Anthony, give us an update on the Agronomics financials in the last quarter. How's the balance sheet looking?
Agronomics has £24 million of cash as at the 30th of September. That puts us in a very strong position. We are, of course, cognizant that the share price is trading at a very material discount to its net asset value, which is 16.48, again, at 30th of September. The reality is there's not that much that we think that we can do about this in the interim, but it doesn't really matter because we have no intention of raising money while the shares are trading at a discount to NAV. And if this is the portfolio that our shareholders have, and we're able to see this through because of the significant cash reserves that we already have, then so be it. Of course, we would like to expand our capital base in the future, but we will simply not do that and jeopardize and dilute our existing investors unnecessarily.
And you've also announced a share buyback program.
Yes, that's right. That was put in place in order to at least partially address the very material discount which our shares are trading at. It's worth noting that our peers of investment companies and trusts, which have market caps of below £500 million, unfortunately are, for the most part, trading at discounts which are actually in excess of 50%. So we're doing a little bit better than our peers, but that doesn't make the share price action any more comfortable. As long as we don't need to raise money, then we're in a perfectly comfortable position. Agronomics operating costs are just over £1 million per year. So the intention is that we may invest down to about £10 million, which will give us 10 years of runway, leaving aside, £500,000 of interest, which is being generated every year with interest rates, around 5%. So we are in a very comfortable position But we would like to see that share price move higher, and we believe it will move higher once the continued positive news is digested by the market, and there's a bit more risk on sentiment from the market as a whole.
So Anthony, what can we expect to hear from Agronomics for the rest of the year?
Well, we are really focused on two key companies, Onago and Liberation Labs. These funding rounds don't come together easily in this environment, but both of those companies are two of our favorites and have very, very strong management teams, very strong technology, and that is why we're seeing really significant interest in those funding rounds. Nothing is done until it's done in this environment, though, so we continue to work hard for our investors, but more positive news flow on that front in the coming months.